There are over 30 elements on Canada's critical metals list. So which is the most critical? Matt Watson runs Precious Metals Commodity Management. Matt, welcome back to Kitco.
Oh, it's good to see you again, Michael. It's been quite some time.
Before we talk about metals, can we talk about demand, Matt? Where are we? Broadly, battery metals have been in a slump and EV automakers are cutting prices.
I think if you look across the metals for all of the clean energy transition beyond just the battery metals, it follows a very similar pattern. We had a very active 2022. We saw prices spike in the battery metals. We saw lithium over $70,000 a ton. And we, of course, have seen all these metals now relax. And quite frankly, it's just purely a macroeconomic slowdown that is overtaking the automotive world. We have yet to get our light-duty vehicle volumes back to pre-COVID levels. We're still fighting to recover from COVID levels. And so the overall volumes are down. It's interesting on EVs, we're seeing some penetration rates starting to stall out in the Europe and in the US. I've been studying the price data today. I was stunned to find out today the gap between BEVs and ICE is actually growing. Most of the price reductions that have occurred in 2023 it's on hybrids and on ICE vehicles. The EVs have actually creep up just a little bit. So it's not apparent that we're seeing dramatic reductions in the EV space on pricing yet. And yeah, we're seeing EVs, even their penetration rates now are stalling out in 2023. And it's a real question, where are we headed macroeconomically? And of course, China is at the heart of that discussion, right? And you've heard a lot of gloom and doom stories, I'm sure, reported to you over the past couple of weeks. I think there's a sentiment that's turning now that, boy, China really is in trouble. So the expectations for these metals commodities markets to pick up, it's actually, I'm developing a gloomier outlook by the week. And I think that's a concern for a number of analysts right now.
Let's talk about Palladium, Matt. That was one of the last decade's best performing metals. How's it looking right now?
So you look at the periodical table and there's all but two metals that are going to increase demand. And Palladium is the big one that's going to go into surplus. And in fact, is in a surplus already. And the bad news is it's likely going to stay there in perennial surplus and continue to accumulate above ground stocks, even with troubles in the mining sector and in South Africa with all of its Eskom and power woes. Man, Palladium's in a bad spot. And if ICE vehicle demand were to pick up, if we can get back to pre-COVID levels, there could be some short-term support for Palladium. But right now, I'm fairly pessimistic. The fundamental issue is the the catalytic converter recycling process. We're recovering cars that are over 20 years old, and the Palladium loadings have gone up over this interval. So we'd expect Palladium to increase in the returns from AutoCat for years, even as EV penetration rates continue to increase. I think you're going to just have the recycled output that's higher and higher. And then the other problem within the PGM mining sector is the nature of the deposits that we're mining. Russia, North America, Zimbabwe, even the northern limb of South Africa are all palladium-rich deposits. If you look at the amount of palladium that comes out versus platinum, we would label them the palladium group metals, not the platinum group metals. Only in South Africa on the eastern and western limbs, some of these older PGM mining sites, that's where you have platinum as the dominant element. And so even the mining sector is going to be pushing more of this palladium, and with a big question, what are we going to use it for? And Michael, I want to step back. So, some 3-4 years ago, I know Norilsk, I had a conversation with the Russians, who are, of course, the world's biggest palladium miner. And they were very concerned. Some 3-4 years ago, they tracked the number of patents, and they were very worried the patent count on palladium is way down. And yet they knew this day was coming. And we need to develop more new demands for palladium. There was a contest, as you may recall, called the Palladium Challenge that was going to be sponsored by Norilsk, with IPMI as kind of the carrier of this contest, trying to give prizes away for the best top 3 ideas on palladium use. That contest had to be shelved due to the Ukraine invasion. I know as part of the IPMI, we're looking at restarting an effort in this vein. But yeah, what are we going to do about palladium in the future is a big question. And so we want to alert the world that, hey, we've got to develop a home for this. That's such a critical part of the PGM basket when you think about it from a mining perspective. And if that's weak, then the impetus to go develop more mining for platinum and for these PGM minor elements that are so important, specifically iridium, and ruthenium aren't going to be there, right? You're not going to have you need the whole basket to go in the same direction. It's not, palladium's just too big of a piece. And I think the miners are extremely gun shy at this point, especially with the timelines they have, on their development cycles from funding all the way to operations. Greenfield projects in PGM world can take 20 plus years now. And so who's willing to invest in that? Right now, it's a cheaper, quicker return on investing in battery metals and other critical metal space than it is in the PGMs. And so the PGMs are a bit straddled now. The basket is going to be straddled where this is going to be the discussion. We're only going to have about 3.5 million troy ounces of platinum, ruthenium, and iridium to play with in the hydrogen economy, maybe 3.5, 4 million. Compare that to roughly 13 million troy ounces a day into the auto catalyst, into automotive as a whole. How big is the hydrogen economy going to be? Maybe not that big. And don't get me wrong, I'm an advocate for going after the mining, but I think it's going to take government support in critical minerals looking at this as a path. And if they could determine that the viability of fuel cell vehicles and heavy duty trucking with hydrogen is the way to go, then I could see some motivation to ultimately get there. But it's going to take some other extraneous impetus to get us really wanting to do that. And right now, there's just not the desire to do it. And instead, as you know, copper, battery metals are a much better play for most investors.
What is holding back fuel cell technology for transportation? I thought that it was going to be carving out a niche for shipping and large trucks.
Absolutely. So the vision for hydrogen, and when they talk about all the hydrogen that they're going to need, for example, the Hydrogen Council, they talk about the need for some 660 to 900 million tons of clean hydrogen, whether it be blue hydrogen or green hydrogen, by 2030 rather. Or excuse me, 2050. That's a huge amount of hydrogen. And so the fuel cell vehicle front, I think the vehicles and their cost are in line. The biggest problem with really getting penetration in the fuel cell vehicle market is one, the cost of the hydrogen, and then two, is just the lack of the infrastructure. The roughly 1,000 refueling stations that are on the globe today, most all of them are geared to light duty. And I question that, since we aren't going to have enough platinum to go as big as people envision that we need to go. Why not focus it where it could have the greatest return? And I think the heavy duty is where it would have the greatest return. Unfortunately, the lion's share of these first 1,000 stations are largely light duty refueling stations. They're not geared for heavy duty. So that's part of the problem. And then the price of hydrogen is by far the most important. In California, for about 5 years, we were averaging about $16 a kilogram. You got to get it down to about $8 to be on par with fossil fuels. So there's still work to do to get the hydrogen cost down. The problem I have is the $16 hydrogen in California just went up to $28. Oh my God, we're going the wrong way. And what's going on? Well, it ends up they're peeling back some of the subsidies on hydrogen in anticipation of Biden's Infrastructure Act, the IRA Act, that will give some $3 a kilogram in subsidy support. But my goodness, if unsubsidized, we're at $28 a kilogram in California. That's a big gap. That's a real problem, and that's a risk. Will the hydrogen economy really come around? I think the fuel cell vehicles are the closest to being cost competitive if we could just get the hydrogen price right and get the infrastructure right. But that's the challenge today.
Matt, I think we've always kind of seen the chicken and egg issue with electric vehicles, just building out the charging systems and then also getting up to that critical mass. And the industry, congratulations, they were able to get there. What's going to be lost, though, if we just don't get to that same critical mass with fuel cells, if we just don't get all of the pieces together? What's going to be missed if we don't develop fuel cell technology to complement EVs?
So I think the biggest issue is, they've set all these mandate dates at 2030 and 2035 being some of the key dates where they want to ban ICE vehicles. Well, in banning ICE vehicles, what you are also banning is hybrids and plug-in hybrids. And I think that's the big flaw. When you look at the breakdown of the vehicle market in Europe and what they're doing to attain the Paris Accord emissions output, it's really those hybrids and the plug-in hybrids that are saving the day for Europe here tactically over the past couple of years. And will over the next few years as well. The full range EVs, the battery metals demand is just so much larger. And I give people simple context. A Toyota Prius, a hybrid, when it first started the first decade, a measly 4.4 kilowatt battery inside. They doubled it later on, and now it's an 8.8 kilowatt battery. Woohoo. A Tesla, a full range Tesla, is 10 times that weight. and therefore 10 times the mass of those lithium, cobalt, nickel, and so forth. So that is the big hangup, is we're trying to drive for this date, and we're going to miss the mark. The mining is not going to hit the volume required to meet those dates. The sooner regulators can wake up to this point, the sooner they can set a better strategy for the powertrain mix and what it needs to look like, including a sliver of the hydrogen fuel cells, including e-fuels. But really, I think hybrids is a key, and there's a growing, I think, impetus for people pushing for allowing for the hybrids to exist longer. I think that will be a good stepping stone en route to full-range EVs.
Now yourself and others have been just pounding the table that we just don't have battery metals in the sufficient quantities that is going to meet anticipated demand. But has there been any developments or change? There'd be direct lithium extraction, for example, sodium-ion batteries. There's also some innovative things that are happening with copper processing.
So you bring up the right button there, and that's the direct lithium extraction. And specifically a DLE process that uses a low amount of water. Today's water, requirements on a brine, on a salt flat, is some 2.1 million liters of water for every 1 ton processed. And simply to harvest the lithium out of salt flats around the world, whether that be the salars, at high altitude, in Argentina, Bolivia, and Chile, where some 60+% of the lithium reserves sit, you're going to have to conquer the brines, and you got to do it using a low amount of water. And the steps that they're taking to develop DLE right now are very much underway. There's large-scale trials that are going on with about 3 different vendors. One of them is one of my clients. And so it's an exciting time to watch that. The importance of that is if they can do that, then you can go big. One of the problems that's pointed out when you look at the battery metal space is just the sheer number of mines required. If you take the average lithium mine size today, we got to develop hundreds and hundreds and hundreds of these new mines of that size to meet the future demand. It'd be so much more efficient to go big and have larger sites, larger processing sites to get there. And I think you can do that off the salt flats. Pretty clear to me, listening to Elon Musk as he talks about this subject, that's exactly what he's focused on. He's focused on trying to develop a direct lithium extraction with low water usage. It's yet to be demonstrated in scale. It's yet to be seen exactly how much water some of these new processes are going to require. I think we'll get a feel for that over the next 2 years. But that's the best hope, I think, for the battery space to go bigger, quicker, is breaking open that direct extraction process. And then the other thing that you see is just the design of the battery chemistries themselves. You see continued motion away from cobalt and nickel, going to lithium and lithium manganese type of battery designs, LFP designs. That too shall continue, both for cost and for material scarcity purposes. There's just not enough of the nickel and cobalt. By the way, all this brings up a big recycling concern. These LFP batteries are underwater economically for recycle, meaning you can do the recycle, you can get the lithium out, but you actually have to pay the difference in treatment charges. And the treatment charges to refine it is more than the cost of the lithium that comes out of the recycling pipe. That's a problem. And so governments are going to have to get involved there as well. And so yet it's another layer of cost on the EV front that is going to be a concern. If you're a scrap collector today, and again, many of my clients are in this space, they have to pay dollars per pound, and for an LFP battery, it's in the range of about $2 per pound to get them to come pick it up and get it off your lot, because it's a financial and fire risk to you and a liability on your scrap lot. You have to pay to get rid of it, to get it recycled, to yield that lithium. So that's a problem there in that space as well.
Matt, I have to get your thoughts on another trend in the battery metal space. People that are supplying the sector are very excited about electric vehicle demand, but they're even more excited by ESS, energy storage sector. Can you tell us about ESS? How does it look to you, Matt?
Well, this is the big dilemma. What are we going to do? And just to set the plate a little bit. So the grand plan now is to install basically all new energy sources between now and 2050, that 90% of them be deemed renewable. And over 60, in fact, maybe over slightly 70% of that would be variable wind and solar, geothermal, hydroelectric, and some other clean sources making up the rest. As you do that, there's a big problem with balancing the grids. Of course, you don't have enough power in the peak evening time without solar. So the storage question is really prevalent because of that. And what technology are we going to use? And what size do we need? Ends up, it's a pretty sizable number, probably more than a battery space could support. I do the calculations. I think by these mandates and by 2050, you're going to need about 15 to 16 terawatts of lithium battery demand just to serve transportation. Do you need an equal size amount of terawatts to serve a storage solution? That just makes that challenge on those metals all that more grand. You can't do it. Today, the storage market is a sliver of what the transportation market is in terms of total demand. And so you've heard sodium ion has been developed. There's some EV users that are going to try that. But as a sodium ion, as a different chemistry combination using cheap metals, a better path. We'll see. It's too early to tell. The biggest opportunity on the energy storage roadmap will involve PGMs today. It is the hydrogen economy / ammonia and or ammonia. Their platinum, iridium, ruthenium are all very directly involved. So again, I think the PGMs are viewed to serve the most likely storage solution, being the hydrogen economy, to get you there. Just because just the sheer size of the storage needed, the hydrogen fits that much better, or ammonia fits that much better than any of these other battery type of technologies, or vanadium flow batteries, or pumped hydro, or flywheels, or on and on. The whole list of storage technologies they're trying to develop. What are we going to use for storage? Kind of a big question, and one that we don't have an answer for as we're rolling out more and more variable renewables each year. So, yeah, it's a bit of a concern.
At the top, lastly, Matt, at the top, I mentioned 30 critical battery metals that are identified by Natural Resources Canada. Which one is the most critical? Which one is the one that you look at and say that this is going to be the one that's going to be the hardest to get, and kind of delay these mandates, delay energy transition?
A lot of people are looking at copper. I think copper is near the top of that list. And the battery metals themselves, right? The lithium, cobalt, nickel, all those as well, graphite included. Those are the ones that are going to be most pressed. What's interesting, in all these critical mineral lists, not only Canada's, but the US, Russia, China, everybody's coming out with their own. Silver is not on any of those lists. And I contend that's a mistake. Some 14% of silver supply goes into solar PV today. And that number is going to grow and grow. I would think even silver is another one of these that is a concern that we're going to have to patch up. I think there's a hole in the recycle systems on silver. Half the silver is escaping the system that we should be able to catch. We need to do a better job on the recycle side on silver in particular. Unfortunately, too much of it is low-grade silver. It's in e-waste and other streams where it's there, but it may not be economical to extract. So another one where the recycle economics are potentially working against us.
Matt, thanks for speaking with Kitco.
Not a problem. Thank you.
My name is Michael McRae. You're watching Kitco Mining.